today I want to discuss Trump versus Powell, the battle over rates, and what it means for the market. Now, the US stock market has been rallying not because the economy is booming, but because investors are betting on an imminent wave of easier money. And that is also the reason why I said that we need to look on Tuesday, we need to listen to Powell, what he has to say with regards to quantitative tightening. Is it reducing it? Is he giving any hints of reducing it? But if he does talk about he's going to cut rates, whatnot, if he surprises the market, which I don't think he will, but if he does, yeah, those kind of news could is make the stock market tick up even faster. Now, at the center of this narrative is a power struggle. Former President Donald Trump is vocally pushing to replace Fed Chair Jerome Powell, aiming to usher in aggressive interest rate cuts to ease federal debt burdens and stimulate asset markets. Now, the Trump's agenda is this. Trump has repeatedly criticized Powell for keeping interest rates too high. In a recent statement, he emphasized that just a 2 to 3% point reduction in interest rates could save the US up to 900 billion annually in debt interest alone. Okay? Because he doesn't want the bulk of the money given to him to be used to pay debts. He wants to use it for the other things, to build his legacy, for example. Okay? Legacy as one of the greatest US president ever. That is his goal, right? So Trump here he wants this rate down is because his logic is blunt. You cut rate now, deal with inflation later. He argues that if inflation rises again, the Fed can always hike rates later. But for now, cheaper borrowing is vital for economic and political reasons. Behind the scenes, Trump is reportedly preparing to name Powell's replacement early, possibly as soon as September or October, even though Powell's term officially ends in May 2026. So while the Supreme Court recently reaffirmed the Fed's legal independence, such as an early nomination would effectively turn Powell into a lame duck chair, right? Undermining his influence as markets begin focusing on his successor likely policy stance. So this is basically, if you want to stop the rot, this is what it can do, right? So if he says like he appoints people that shares the same vision with him to the chair, then the stock market will move in advance. Okay. So this is basically Trump's agenda. Now, from Powell's view, Chair Powell, however, remains cautious. In his recent congressional testimony, he confirmed that the Fed's wait-and-see approach, stating that the central bank expects inflation to re-accelerate in the second half of 2025, largely due to tariff-related cost pressures. Now, this projection justifies the Fed's decision to keep rates steady for now, even though central banks in Canada, Europe, and Japan have already started easing, right? Now, Powell acknowledges that if inflation remains contained, cuts could come sooner rather than later. But he firmly added, right, there is no rush. That is his main point right over here, was to rush. Okay, I don't see the need for me to cut right now. Okay, especially the president, right, don't have any power to force me to make this kind of decisions. So with the labor market still strong, Powell emphasizes that the premature rate cuts could risk reigniting inflation. So that's why right now, this Thursday, it's important to look at the jobs data. So if we see some weakness, I believe the probability of the rate cut in in September will be very, very high. It's already high right now. It'll probably go even higher. But the July one, that is the one, that the traders are looking at. Now, for the market bets, right? Despite Powell's caution, markets are betting heavily on a shift. According to the CME Fed Watch 2, there's a 91.5% probability that the Fed will cut rates at its September 17 meeting, with another cut expected before the end of the year, right? Now, the July 30th meeting, however, is unlikely to bring any chances, with a 80.9% chance rates holding steady. Now, the divergence between Fed's communication and market pricing is partly fueled by Trump's pressure. So, if a Trump-friendly nominee is announced soon, markets may begin ignoring Powell altogether, pricing in the views of a future Fed chair who favors deep cuts, right? Now, as for the debt ceiling pressure, meanwhile, Treasury Secretary Scott Bessent has extended the government's cash management maneuvers to July 24th to avoid breaching the debt ceiling. Now, the urgency is clear. Interest payments are now projected to exceed 950 billion annually, crowding out discretionary spending. Now, this is something that Trump doesn't want. Not only Trump, actually, the future presidents who wants to come in and say, now I want to do something. I want to make America great again, but I don't have money to do so because all my money is used to pay debt. That's not going to be fun. Okay? So lower rates would ease this burden, making Trump's push to cut rates both politically strategic and fiscally essential. But until Congress acts or inflation decisively cools, Powell and the current Fed remain reluctant to pivot prematurely. And the impact on the US dollar and the S&P 500 is this. You definitely going to see continuous dollar weakness as expectation of lower rates grow fueled by Trump's rhetoric and market sentiments. The US dollar has weakened. Now, Bloomberg's dollar index has fallen over 8% this year, with losses accelerating after speculation that about Powell's replacement surface. Okay. As for the S&P 500 strength, equities, meanwhile, have rallied. The S&P 500 is pricing in easier monetary conditions, not stronger fundamentals. With M2 money supply rising and borrowing costs likely to fall, investors are anticipating liquidity-driven gains. So, as a conclusion, the situation reveals a delicate tension between the economic prudence and political pressure. Powell's Fed remains anchored to inflation forecasts and data, while Trump is leveraging early nomination talks to reshape market expectations. The result, a market betting on rate cuts, a weaker dollar, a rising stock market, and a Fed chair whose authority may be eroding long before his term ends. Whether this dynamic delivers stability or sow future volatility will depend on how inflation unfolds, how the debt ceiling is resolved, and who's ultimately steers US monetary policy in 2026. Okay? So hopefully you have a clear idea what's happening right now. Let's move on to the charts.